The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the November 4th magnificent Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call Love is the Purpose. You know, two of my favorite rules are, when you rule your mind, you rule your world. And where there is no vision, there is no direction. Today's rule is, love is the purpose. And each of these intertwine, and they're interdependent, I should say, upon each other. You know, in order to know your outcome, you must, and I mean must, have a strong purpose. And in my opinion, there is no stronger purpose than love. In fact, love becomes the purpose of our being alive. And surely there have been billions of words written about love, but not one or all of them can fully capture the essence of love. Most everyone has heard or said that love is unconditional. That means that love at its highest level demands nothing in return. Every outcome that is important to you and I, every outcome that's important to us in life requires a vision, because without vision, there just simply is no direction. So let me share with you what I call an incantation, something that is good to repeat to yourself, that'll work for you each time you are about to have an important conversation. And Lord knows, we've got conversations that go on all the time. Maybe the next time you're making a sales call, you can use this, or just simply interacting with someone to attain your outcome. What you should do, you should write these words down. Say this to yourself. Say, I am a radiating center. That's right. I am a radiating center of universal love. Ooh, does that sound good? I am a radiating center of universal love, mighty to attract my good, and with the ability to radiate good to others, especially, and this is where you would go ahead and insert the person that you're going to have a conversation with. Folks, it's an incantation that will bring you to a feeling of miraculous energy, a force that is so strong when you say that, when you repeat that to yourself, you've got to feel it. So you've really got to feel it. You've got to visualize it. And as Tom likes to say, you've got to step right into it. Let me leave you with this last thought, and that is that every single atom in the universe responds and yields its deepest secrets to unconditional love. Folks, when you rule your mind, you rule your world. And vision, that's the direction. But love, folks, that is the purpose. And I absolutely love being here with you. Hope you all had a great weekend out there. Great to be back. It is Magnificent Monday. So let's go check out these magnificent stock charts. Our call-in number is 877-927-6648. You give us a call. Happy to take a look at your stock chart, answer whatever question I can. Right now, Dow Futures up about 60 points, trading out at 15,602. ES Mini up 7 points, 7.25 points, trading out at 17.62 1/4. Nasdaq up 18 points at 33.86. King Dollar back 6 ticks right now, trading out at 80.74. Gold is up $5. Silver flat. Light sweet crude down 31 cents. Across the pond over here, the DAX right now is up 38 points. The FTSE up 42. The Nikkei, I believe, was closed last night. The Hang Seng, though, down 60 points, and the Shanghai absolutely flat out there. So let's begin by taking a look at the ES Mini. We're looking at the 30-minute chart, the EKG of the marketplace out here. If you are just listening on your mobile device or the radio, That's a wonderful thing. With the mobile device, you'd be using TFNN.mobi, but remember, you can always get the live stream of this on your smartphone device by going to the home page of TFNN.com. Upper right-hand side, you'll see a button, 3 smartphones. Click on that. This show will stream live to you. You'd be taking a look at the ES Mini chart with us. So let's go back a bit here. You can see some blue descending lines. I ought to probably just change those to red. There we go, red. Red for down. So if we take a look at the ES Mini, coming off of the highs out here that it created back on October 30th at 6 a.m., that level was 17.73 and a quarter out there. The ES Mini had formed this descending price channel. In fact, Friday's bounce, we saw Friday move down, get down to a low interest session around 12:30, right in that 17.47 level, and then went ahead and bounced from there. And, of course, coming into the close, you can see that price got up above. This is coming in at 4 o'clock. It moved above, got up to 17.59, and just as we were coming into the close, price came right back down into that descending price channel. We saw it attack that level here last evening. That's on Friday at the last session here. We had the ES Mini open up kind of flat last night at 6 p.m. Eastern Standard Time, and what we saw was price just simply finally getting above that descending price channel out there. When you break a price channel, that's important for us to pay attention to. We'll take a look at a number of different price channels, whether they're horizontal or diagonal. Horizontal, that has more resistance and support. That has more meaning, I should say, than diagonal does. And if we take a look, we've got a couple of competing trends out here. Now, number one, we can see that the ES Mini has broken through that descending price channel. That alone is bullish. There's a possibility of an A to B equals CD that is setting up on this 30-minute chart. Of course, what we can also see at this stage as we come into our open, and this is where it will be interesting out here, and I'll explain why. We can see on the 30-minute chart that what the ES Mini has done is it's gotten into a overbought condition out here, just utilizing that 14-period relative strength index. Each time, you can see even coming into the session out here at about 9:30 last night, it got up. That was at a level of about 17.60.50. Got into the overbought range, just simply moved lower to sideways to work that up. Guess what? The market is back up at that level. If I just simply come across to a little bit further left on the chart here, you'll see a session at 2:30 in the afternoon. This is on October 31st, and this is where the bears were camped out. We're going to see if the bears are still camped out right here. This is where they came into work. This was at 3 o'clock in the afternoon, formed this little piercing candle. Wasn't a full bearish engulfing candle at that 3 p.m. session. Nonetheless, we've got some resistance. We've got a couple of forms of resistance that are going on here. Number one, what we have here, and this is why this is going to be very important to be watching the level of 17.64. First, it's where the bears last were really working. Well, they did come to work right back here at about 10:30 in the morning, and that is on November the 1st out here. But you can see that price is above that level. That is a bearish engulfing candle-ish. Maybe the market was moving up. We'll give it the benefit of the doubt out here. And so you can see it's up above the 17.6125-ish level. He definitely had a bearish engulfing candle right here at 10 p.m. This was last night out here. So you can see that old resistance, and that's what this level is, becomes new support. We'll see if it acts as support as the market works off a bit of this overbought condition. Now, this next level out here where the bears have defended their spot is at that 17.64 level. If price gets up above that, what we will see unfold is an A to B equals CD up pattern. If we take a look at what that price projection is at the moment, well, 1-to-1 takes you to 17.6950. I say, if price is actually able to get up above this resistance level, that being the 0.618 retracement as well, because that is in essence right here at that area where we've got this little piercing candle that had formed on the 30-minute chart out here. If price can get above 17.64, I say 17.69 is not where price will stop. Instead, what we'll see is we will see price try to get all the way back, maybe even take out that resistance area at 6 a.m. That would be the 17.7325 mark. But first, We have to see how this area. So it's going to be important to watch here during the 9 to 11 o'clock session. So certainly in the next couple hours, we'll know what the market is telling us it wants to do. Looks to me it wants to open a tad higher and then pull back, and then that is when we will get our signal out here. That is on the ES midi. If we go take a look at this is an intraday chart here. This is where we're understanding the breathing pattern of the market. So this gives us a feel as to what's going on. Now, remember, last week we saw a number of key reversal sessions. We've seen some volume off of the highs, such as in the Russell 2000, in the IWM. We've seen the bears take control of the market inside the New York Stock Exchange. We would need 882, 883, something like that, net advancing issues in order for the bulls to actually take control. So we've got some diverging patterns out here. Of course, one of those patterns is and I'll go back to the S-mini in just a moment here because I forgot to draw this pattern in. But if we take a look at the Dow daily chart out here, what we do have is we've got that sideways, that 1,000-point consolidation move inside of the Dow. And a break, a close above, this is the futures that we're looking at here. If we get a close above 15,676, that's the number you want to write down on a pad of paper. 676. The high on September 19th, that was 15,658 out there. Why do we want to write that down on a pad of paper? Because, folks, if you get a breakout of a consolidation, your move is equal to or greater than the consolidation level out here. So we can see, is this the fourth time is the charm? 1, 2? No, the fourth time. Is this the fourth time is the charm for the Dow, or is this going to act as a significant resistance level? We're going to know soon enough out here, but if we do get a close above it, guess what? We're looking at 15.6. We're looking at 16,600 inside the Dow at a minimum, because of the consolidation breakout. Now, if I do go back here into that 30-minute chart, now let me go back. It was under this tab right here. You can also see that there is a bit of a consolidation that is also going on. I didn't mean to do that. I meant to grab a box out here. We'll come back. Let's see if we grab that circle out here. So you can see here, in essence, is really the consolidation that is also going on inside of the ES Mini. So I did say if you break a consolidation, we'll just go ahead and we'll measure that box out here. What this actually says is a break out of this consolidation box. And what we would likely see here is a move up beyond the highs from October 30th. That being the 1773, more likely what we'll see unfold is a move to 1778. So the bulls and the bears, we're going to watch them because we know that this is up against some fairly decent resistance out here. We most likely, what we really want to do is be paying attention to this move up out here. Now, if I take a look here at the New York Stock Exchange, let's go over, take a look at the NYSE chart. This has formed a real nice 3 drive to a top pattern. What's a 3 drive to a top? I'm glad you asked that question. It's a pattern that first is not forced. It's a pattern where between the first drive up, that would mean the first high that you're taking a look at, and the second high, that it just simply identifies usually a Fibonacci expansion number. You like to see 1.272, 1.6. In this case here, we didn't really get that. We got 1.5, but what we did get is we got time. If we take a look here at our cycle time from the first drive to the second drive, that second drive took place on September 18th. That's an important day. If we go ahead and have that exact same time frame out here, we will see that really completed on November 1st, on Friday. So it completed about 1 bar too early out there, but we got a key reversal session. This is significant resistance, 127.63. We take that out, the markets will run higher. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. In the pre-market out here, we've got Realgy, RLGY. It's a ticker symbol. They're out with earnings here. Let's see, they had net income or revenues of $1.5 billion versus $1.28. The net income not showing up on my. Yeah, they did $109 million versus a loss last year of $34 million. They closed at 40.67. Last trade here, firing off at 43.51. Number of solar companies that are jumping this morning. Solar City SCTY, they closed at 54.75, trading out at 56.95. Canadian Solar CSIQ, they closed at 25.56. They're trading at $27 and change right now. First Solar FSLR closed at $59. They're trading at almost $60.73 out there. To the downside, BlackBerry leading the charge to the downside dollar-wise. They close at $7.77. Last trade fired off at $6.50 out there. You've got the UNG. Boy, natural gas here is really getting hammered. The kibosh on it. It closed. UNG closed at $17.45 right now. UNG trading out at $17.01. Facebook down just a tad. They close at $49.75. They're trading at $49.48. Let's take a look at the currency pairs out here. Let's go see what we've got going on in the currency market. Let's start off with the U.S. dollar, Japanese yen. U.S. dollar, Japanese yen having a nice 1.618 expansion of a set of swing points, that being the September 18th low to the high that was put in on September 20th. That expansion subtracted from the high on September 20th brings us down into the level that on October the 8th, the low out there of $96.54, setting up a Gertley buy pattern out here. Now, the very first move of your Gertley buy pattern, the minimum move. Let me try to rephrase it like this. Let's see, what's the proper word here? Using words is very important. The normal move of any type of Gertley buy or sell pattern, your objective out there is for it to get into the 0.618 retracement level. And that's exactly what took place inside of the U.S. dollar Japanese yen as it made a high back on the trading session of October 16th, got up to a price of 98.96. You can see the bears stepped right in on that very next trading session, the high 98.99 right there. So just a couple of pips higher. 98.99, we'll just call it $99, is a area of resistance. If, in fact, the U.S. dollar Japanese yen can get up over that, well, then what it's doing, it's making an A to B equals CD if we're up to the upside. If we take a look at what that pattern here looks like, our A point is going to be the low that came in on October 8th. The B point is going to be the high of the top of that bearish engulfing candle that it has got to get up over. And the C point will be a low retracement that it made on October 25th. 1-to-1, A to B equals CD, would take up to 99.37. So somewhere between 99.37 and 99.70. 73 is would be the likely extent of the move before it would actually set up its next Gertley pattern. This one here would actually be a Gertley sell pattern. It would look like this. We'll go ahead, we'll color it in. So it's somewhere right around here. Of course, what we can also do here, that's the, here's what I would do. I'm going to delete this. We're going to actually come here, because many of you don't have this tool here that I am using. If you want to be able to use this coloring tool, you just got to check out the Ensign software. But if we take a look here at the 1.272 expansion of this of the C to D B to C set of swing points out here, what you can see is I'm measuring this, and I got the 1.272 comes in about 99.54. So that is a likely target area for the Gertley sell pattern to actually set up. Now we'll go ahead and we'll color that in here. So right around there, it's going to make about a 0.786 retracement. You're going to have a 1.272 expansion, and the pattern there would look just like that. Let's get rid of a couple of lines out here. Let's get rid of that formation of that A to B equals CD. Let's also get rid of the Fibonacci levels out there, and that's what it looks like. So it looks to me like that is where the U.S. dollar Japanese yen now would make sense to me for it to actually be able to spike up above that level. If it closes back below, meaning inside the lower part of the range, holding that bearish engulfing candle from October 17th, that really sets up a sell pattern. Now, if you go take a look at an intraday chart out here, the intraday chart, the 30-minute time frame, what you will see is that little rising price channel that the U.S. dollar Japanese yen. You can see the A to B equals CD, says about $99, even Steven, as its next move. It had completed a 1 to 1.272. A to B equals CD. Nice wide-ranging bar out there. So looks like that's where it is headed in a real breakout so that it doesn't form a Gertley sell pattern. Well, it's a rising price channel. You can't really break out of something that's rising if it's rising. So we'll pay attention more to the daily chart out there for our next signal in the U.S. dollar Japanese yen. Right now, we've got the Dow futures up about 55 points. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Races. We got the Dow up 43 points, trading out at 15,658. S&P's up 6 at 1767. Composite up 10-plus points at 39.32. Russell 2000 up 4 points out here, leading the charge. The upside up almost 0.4% this morning, trading out at 10.99. Apple up $2 and change. Microsoft up 13 ticks. Google up a couple of dollars. Leading the charge, the upside is Veeco Industries or Instruments. Yeah, it looks like Veeco Instruments, VECO, up 18% this morning, up $5 and change. Let's see if they are out with numbers. No, I don't see anything on the number side. You've got Tesla Motors up about $5 right now, trading out at 167. Berry Petroleum, I believe they and Lynn Energy unanimously amended a merger agreement. They are trading up a nice 10% here this morning. Solar City up 6%, up $3 and change. Anerin, A-N-E-N is a ticker symbol, up 11%. They're going to be acquired by Veritas Capital this morning. Rheology Holdings, that's up 6%. Tri-Point Homes, TPH, is a ticker symbol. They are up about 14.5%. They're going to be combined with Weyerhaeuser Company's home building business for about $2.7 billion, I believe that was. You've got C-Trip Communications, CTRP. That's up 3% this morning. To the downside, Penn National Gaming. Ooh, looks like they crapped out. They rolled craps here this morning. What is behind this? They're down 77%. There's got to be something else going on there. Oh, a tax-free spin-off. There we go. So we won't pay attention to Penn National Gaming. To the downside here, World Acceptance Corp, WRLD, they're down about $8 and change. Men's Warehouse, MW, off 3.5%, off $1.61. Credit Suisse down $1.60 as well. That's off 5%. The CME Group, they are trading down about 3%. BlackBerry down 16% this morning here. Trimble Navigation, TRMB, they're down about 3%. Our call number 877-927-6648. As we, last week on Friday, I believe we had a call from Lou who was taking a look at trying to get in on a short in the Queen. That's in the U.S. dollar. That's in the euro U.S. dollar currency pair. I suggested that he hold off and wait for a pattern to complete out here. As we take a look at this chart, if you're watching us on Tiger TV, you can see an area of potential support. That's the black horizontal line going across my screen out here. I suggested that with the euro getting into the extreme, and I do mean extreme, oversold territory. Looked like nobody wanted to hold on to euros coming into the weekend out here. Gets into the very extreme level. That needed to be worked off. Now what we've seen here, this is actually bearish for the Queen out here, because you can see that not really much of a bounce. In fact, no bounce to even write home about or speak of out here. That doesn't mean jump in on the short side just yet, but you can see a very tepid move. That is not the, you don't even, a counter trend bounce on this. Even if I get super conservative, which I don't have a problem being super conservative. Let's take a look at the 2 p.m. session on October 30th, down to the low that was put in out here. This should at least bounce to 135.94 out there. So I would say still just I'd say be patient at this stage, but it's not necessarily looking good here for the Queen. Now, the next area, it did hold the support level. It didn't totally get down there. You got to be able to move the support lines up and down just a tad out there. So you want to use these things as guidelines out there, as Jack Sparrow would say from Pirates of the Caribbean, right? And what we also can see is maybe a bit of a trend line coming back into the sessions here. Again, it's a 30-minute chart we're looking at. So if you go back to July 9th out there, so it's back pretty good if you take that low. And then the next low that comes in here at about 2 o'clock in the morning on September 6th, so a couple months later out there. That's the red diagonal line that you're seeing. So a break of that would spell toil, trouble, whatever. I forget the old Macbeth lines. He's had to memorize that as a kid. Now let's go back over and take a quick peek out here at the I'll get it out, the S&P futures. So, as you know, we were taking a look at the S&P futures. We were showing what? Showing that it was getting into that overbought condition out here, that had to work its way off. And so that's what we're seeing here right now. Now, what we want to be paying attention to is this 0.618 level, which is 1763. That's a kind of a green horizontal line going across my screen. That's not really the top of resistance. Resistance is going to be right back here at 1764. So just a point above that area. But what the ES is doing here right now, it's just working off a bit of that overbought condition. And it's going to be really this move here that'll help to tip its hands out here. If, in fact, we were to see any kind of significant selling or pullback, what would be number one watching for is it going to be able to break the B point out here. That's the level of about 1755. And then is it going to try to come back and test the descending price channel that it is broken out of, or just the consolidation area, which is around 1750. So we'll take this one step at a time out here. And that's by taking a look at the ES Mini. If I go back, just not to flip here, but if we go back to the currency pairs and take a look, we're looking at the 30-minute chart for the euro. Let's go take a look at the daily chart for the Queen. Actually, let me just switch over to this tab right here. As you know, last week we were watching here the euro U.S. dollar and the weekly chart as price moved right up into that long-term descending price channel. That's up in, this happens to be, let me just change this. Let's change that to the red lines. let's change the trend line here to a black color. That makes it a little bit more logical, doesn't it? So it's the red lines on my screen that we're taking a look at. That is a descending price channel, long-term, going back into the 2008 timeframe. The euro ran into that in a big, old, bearish engulfing candle. Engulfing as far as weeks, 1, 2, 3, 4, 5 weeks were engulfed in essence, what really turned out to be one trading session out there, mostly Friday, a little bit of Thursday and Friday out here. Now, with regard to the downside, with regard to the euro, it also has been traveling this little bit of rising price channel out here. So, there may be better patterns out here as far as reward to risk, because the bottom of this rising price channel has held. This is a rising price channel going back into August of 2012 out here. Again, it's a weekly chart that we're looking at on the screen here. If we take a look at the daily chart, see what the daily chart here shows us. Daily chart shows us that, it had been traveling in the consolidation. Remember, consolidation is going to, when you get a breakout, it's going to be a move equal to or greater than the consolidation pattern. That's the second yellow box. We can see it did move up a bit higher, completed the 1-to-1 A to B equals CD. That's at the level of 1.38. Now, if we just take a look at normal retracements, the normal retracement of an A to B equals CD, same thing as really when you're taking a look at a Gertley pattern out here, the dead cat bounce, that's where you expect it to get down to. That's going to be the first real test of a support level, because that happens to be the resistance level. I'm going to get rid of the retracements now. You can always put that in there. But what you can see is this black horizontal line going across my screen. That's equal to that dead cat bounce. That is equal to the 0.382 retracement level out there. And that is where we will find out if, in fact, the euro can find some support out here. That is on the Queen. Let's go take a look here at the Great British Pound. Let's go see what the pound is doing, if there's much movement out here. Where is it? Great British Pound. Boy, there we go. Here's the dollar. Here's the U.S. dollar, Great British Pound. You can see that it is in a consolidation box. Let me just update this, make sure everything's updated. That is, let me get rid of that there. Wide-ranging bar. This is September the 18th out here. So you can see the Great British Pound has come down into that consolidation area. And so the breakout either to the upside or the downside is going to be equal to that small little yellow box out here. Right now, the consolidation pattern is holding. Speaking of currencies, let's go check out Goldilocks and silver. Let's go see what's going on inside the hard currencies out here. Right now, gold is trading out at a price point of $13.18. Let's go see what Goldilocks is doing. Now, if we pull this back here, and a couple of different things that we'll look at. First, you've got the red lines, the red descending price channel lines on my screen. These are the price channels that go back really to the highs in October, when we had gold out at the 1,800 level. 1,798, I believe, was the number. What we can see here, what Goldilocks has done. Now, you've got the bottom of that descending price channel. That's really well marked, because we got many more than 3 co-located opens or closes. That means it doesn't matter whether it's an open or a closed candle. You're just using the body of the candle, the essence of price out there. And we can see that Goldilocks broke through that with some conviction on August the 16th out here. Now, I show a bit of this is black lines that are also going down, a little bit of a price channel that gold may be traveling in as well. In order for gold to really confirm a breakout and the continuation of an A to B equals CD pattern to the upside, number one, you're going to want to see it close above 1327.30, but more so, you really want to see it close above the black channel, trend line, whatever it is that you might call it out here. Just simply use the open session from August 29th. That open is at 14.18.20, and then use as the next session. You have that little doji candle. It means the market is tired, has lost its way. It acts as resistance, so you're going to also want to see it close above that level, and that is at 1361.80. If you see it close above 1361.80, that would suggest that the A to B equals CD pattern on gold to the upside would be underway. That will take you into about the 1501 level out here. And that is what's going on inside of Goldilocks. Let's take a look at hi-ho silver. Silver right now trading out at $21.81. It's competing with a little bit of a rising price channel. Of course, silver here, if we pull this back, just coming back to the same levels, the same highs out here area as we took a look at gold. You can see that it is in certainly a longer-term descending price channel. So silver will not have broken out until we see a close above that red descending price line out there. Can't really give you what that target price is until we see when gold gets up into that level out here. But right now, silver's holding up pretty well, just coming off of a shorter-term rising price channel. But it's trying to break through that to the downside out here. And certainly from an overbought, oversold level, it's got room in order to be able to do that. So that's what's going on inside gold and the silver. Let's take a look at light sweet crude, see what it is doing. We can see here light sweet crude now getting down to that 93.82 mark. Let's see, intercession here. It's gotten down to 94.06. What we can see is a 2.618 expansion of the B to C swing point. I suspect this is going to be the area here where if we do see the bulls step in, this is where we're going to see them step in. Number one, we're getting down into a oversold level out here. And, this is the spot. This is the spot right here where if the bulls are going to show up, they should show up. And that doesn't mean I say play it to the upside here, because the upside, it really has some limited potential. You're talking about running into resistance at that $99, because that is that longer-term consolidation range that light sweet crude has been traveling in. If we take a look at bonds, let's go see what the 30-year Treasury is doing. It itself has its own rising price channel. Price moving down into the low of that here earlier this morning, bouncing out of that area. It still has the A to B equals CD pattern. That will take it up to about 137.05. That is your one-to-one pattern out there in the marketplace. If we take a look at natural gas, let's see which contract do we have up here. We've got the Z, not like for Z in the den, but that is the December contract. You can see that it has broken the consolidation that it was traveling in. Actually says that natural gas on the December contract ought to move down to about the 228 level. This too also getting into the oversold or extreme oversold level. So we'll pay attention to this. But you've got that longer term descending price channel. In this case here, let's change those to red lines. Let's just try to keep red as descending. And trend lines, let's just use those. I probably ought to standardize. Might make it even easier for myself out here, but I just haven't. In any event, here you got the black trend line as well. So, that's on the December contract. That's where natural gas is trading into. Let's go take a look at some of these equities here. Popping and dropping in the marketplace. Let's take a look at some things that are going to the upside. Let's look at upside. You got Solar City. They're the leader in the clubhouse. Well, I guess as I come back here, let's take a look at Valero. I don't know who it was in the den. Somebody in the den, I believe, had pointed out a pattern inside Valero. Whoever that was, nice job out there. We had Valero here, which was traveling in a sideways consolidation. That's the larger yellow box that you see on my screen out here. And when it breaks out of a consolidation, the move is going to be equal to or greater than that. We'll take a look at what Valero, VLO is the ticker symbol did. You can see here I identified where the breakout target would be. The breakout target either equal to that consolidation box or really the next area of resistance, that area of resistance set up here by that bearish engulfing candle and swing point, taking us back into the May 20th level. That's, in fact, what Valero did. It broke out. It did the breakout session on October the 17th, of course, buying it at the session low of the consolidation range. That was a nice trade. I know there are a few folks out there that took that trade. Then what happened here is 2 trading sessions ago on October 31st, it formed a reversal candle. Interestingly, as it made its price objective out there, and that was the shooting star, the kin to the hammer candle, shooting star only taking place up at highs, whereas the hammer candle taking place when the market is moving lower out there. So right into the resistance zone. You did get a little bit of follow through here on Friday. What does that suggest? It suggests a pullback. Where could that pullback be? Where, oh where? Well, if you take a look at just the dead cat bounce, 38.73 is a likely target for Valero. Dow's up 34 points. S&P's up 3. We'll be right back, folks.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow is up 35. S&P is up 3. But the story here this morning is the New York Stock Exchange. It's up 23 points, up about 0.25%. We've got net advancing issues at the moment, 1,287. So you've got advancing issues outpacing decliners by 3-1 here at the early stages in the first 24 minutes of trading out here. That's more bullish than bearish. I don't know if fund buying has anything to do with that, but we want to be paying attention to the NY NYSE, and the number you want to be looking at is as coming into the close. It doesn't really matter what the net advancing or declining issues are at 9:55 a.m. It matters what they are at 4 p.m. Right now, the bears have firm control of the market, and the oscillators are, the summation index is down, oscillators are below zero out here, and so long as there's not net declining, net advancing issues, I'll get it right, net advancing issues of greater than 882 out there, the bears will continue to exert their influence inside of the markets out here. Now, we've got the ES Mini back up on my screen out here. You can see that is working. It is working off that overbought condition, just as it was supposed to, just on par out there. It's why you want to go ahead and utilize these indicators out here to help you, for entering and exiting trades or managing trades, tightening stops, things of that sort out here. The marketplace is nothing more than an electrocardiogram out there. It is a living, breathing organism. It has to inhale and exhale out there, and we just simply want to be able to measure which of those two has more strength inside the market, whether it's the bulls, the buyers, or the bears, the sellers out there. So we know what we're going to be paying attention to on the NYSE. Of course, we also want to be paying attention to what's going on inside that volatility index. Right now, it is still below a 50-day exponential moving average. It is up a bit here this morning, so that is a little divergence in a market that's trading up. You also have the VIX that is up here, so you got options traders getting a little twitchy out there here this morning, but still below the 50-day exponential moving average, which measures out at about $14.71 right now. The VIX is trading out at $13.56, but if it moves higher, and if it gets above the 50-day exponential moving average, you can expect some carnage in the streets out there. And last week, we got signals all over the place, Let's go take a look at the Russell 2000 here this morning. The Russell 2000, the IWM, big moves here. You had big bearish engulfing key reversal trading session. That was on October the 30th. You can see that the move down, it made its first natural and normal move down, which was that dead cat bounce, a 0.382 retracement off of the last set of swing points. That's a swing point low from October 9th at 1037.86, all the way up to the high of that key reversal session on October 30th out at 1123. So it's made that first bounce inside the marketplace. We really want to be paying attention to that black diagonal line. That is the trend line inside of the Russell 2000 to get some kind of feel for just what this market is going to do, because that has been the strength. That has been a strength area inside of the markets. And then if you take a look at, I had to keep hitting my screen here, because, and the volume is apparently right. Take a look at that volume spike bar on Friday inside the small caps, the IWM. I show 117 million shares to the downside. That, folks, is big, and that is something to be paying attention to big time. In any event, folks, if you're off to start your Monday, remember it is Marvelous Monday. And otherwise, stick around. I'll be up for the next hour, and I want you to remember this. And that is that you have an amazing power within yourself. That power is so strong, it'll create a life of abundance. It'll cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, and most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. We all love you here unconditionally. Have a great day. Look forward to seeing you soon. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.